Hello and welcome to another edition of 9 to 5 Live. My name's Mark Williams and here to join me is Francois Savary. Francois, hello.
Hello.
Nice to see you. Thank you for joining us again. Last week, Nividia announced its results and they were very, very good. And I'm starting to think that everyone expected the results to beat expectations, which they did, which seems like a silly thing to say, but it's starting to be true. What do you think of those results?
The result was stellar. They are telling you that the story of artificial intelligence is still really going on and that it's not something that is abating. And we all know that you have the four or five majors which are the huge, they are the demand. In fact, you look at the Meta, the Amazon, the Google of the kind, they are the one who are really um, going ahead with artificial intelligence. And when you look at the numbers in terms of spending, when they published their result a few weeks ago, you could see that it was going to be a very strong set of results for Nvidia, and it was confirmed. And don't forget that they are coming out now with a new chip that is going to get live in the coming months, and that is even more powerful than the preceding one.
Is there So coming back to beating expectations on earnings, is there anything that we can look to have a rough idea of demand for these products for the big tech?
As I said, you need to watch for investment. What the companies like Amazon, like Google, like Meta are telling you about the way they will invest in new structures. Because at the end of the day, the demand for the time being is mainly concentrated on those big players in the tech industry. You know, at the end of the day, the key feature for artificial intelligence will be when really you can feel that there is development that is flowing into the rest of the economy. For the time being, it remains only the tech, not only, but mainly the tech, the big techs, which are the main demand for the products of NVIDIA.
There's some commentators who are expecting the stock markets to ride the crest of a wave on the back of these big tech stocks, and therefore they say you have to stay involved in these stocks. What's your thoughts on that kind of sentiment?
I would tend to agree. You know, the market, when you think in terms of macro, global view, and etc., you could see that the market is really pushing ahead quite significantly since the beginning of the year, more than many people had expected. You had some major bears who decide that they turned the position from bear to being quite neutral, which is already a big step. And you have very few people who are bear on the market. The market is still facing the same, I would say the same elements, which are on the one side, the interest rates, and when will the interest rate cut come? And then you have the issue of earnings, because now people are expecting earnings to grow quite significantly, and it supports the fact that the market is pushing ahead. So at the end of the day, the market has run quite a lot. You had over the last few weeks some kind of rotation. I still believe that you need to stick with visible growth in your portfolio. And clearly, the big techs are visible growth because for the time being, the results are stellar and their guidance are good.
Which are the sectors that you see as have as having underperformed the most the rest of the stock market? Are any of those? Can you find good value in any of those?
I think that again, you need to have a portfolio that is quite diversified. I would not make any bet and say, okay, it's all the tech or anything. You in the current market environment with still a lot of question marks about the development on inflation, the development on growth, because we also that inflation numbers in the US were not particularly good since the beginning of the year, pushing the Fed to say higher for longer. And on the growth front, you could see that you have some cooling in the activity in the US. So considering that, I think that you need to have a diversified portfolio and not put all your eggs in the same basket. That's for me the key point in the current market environment. I still I still believe that you have some companies like Staples, which underperform quite significantly, could offer some good value for investors. They have some growth, they have some visibility. There is some kind of, you could feel in the market that some people are going after those stocks. Healthcare could also be, because some of the healthcare companies, which were strong outperformers, the Novo Nordisk of the kind, Eli Lilly, or those kind of stuff. But you have all the rest of the sectors who have not performed well, and I think that maybe you could try to find some stuff there. There is also the fact that look at luxury. Luxury has not been great. Did not go through a very strong months lately. Maybe to take a look at that and maybe to find an entry point on some of the stocks. I think this is something that you could consider.
Are we in a market scenario where big is best? Isn't it time to start looking at small caps, which have seriously underperformed the market for a few years now?
I agree, but lately they have performed quite well when you look at small and mid cap in Europe or less in the US. But in Europe, it has been the case because the perspective that interest rates are going to come down, and is something that usually is very supportive for small and mid-sized companies. And in Europe, the case, I think that there is a case, and this is something that I have advised to do 2 months ago, that to go for the European small and mid-sized company is quite interesting. And there is all the reason to believe that they have underperformance, that the underperformance is too big not to have an eyes on those companies through a diversified fund could be a solution.
Okay, Francois, is there anything I haven't covered that you wanted to cover?
Nothing in particular except that this week we need to watch very carefully what is going to happen with the price index, the core PCE that is going to be published at the end of the week, and this is something people will have to take a look, and also the revision for the GDP in the US. It will be very interesting knowing the recent numbers, weak retail sales, and those kind of development lately. What will be the impact on the revision of GDP that we will see on Thursday? And I will take a look very closely to that. And the last point I would like to mention, and I was very interested by that, is that for the first time in 6 weeks, investors or future measures are telling you that hedge funds now are getting short the US dollar. A very interesting development to my point of view, and we need to see if there is an impact on the US dollar in the course of the next few days.
Okay, Francois, thank you very much for all of that, and I wish you a good week and speak to you next Monday.
Okay, thank you very much. Have a good week.
You too, bye bye.
Bye.